The secret to your financial success is inside yourself. Welcome to Inspired Investing. I'm your host, Nicholas Mukano, and as always, I'm joined by my co-host, Christopher Cox. In this week's episode, we're going to be speaking about risk. The level of risk you assume should be individually defined. So which is better, ETFs, mutual funds, individual shares?
My answer to that question is all of the above. It's healthy to have a portfolio of ETFs, mutual funds, and stocks, shares of stocks, all in one. Mutual funds are funds that are managed by a fund manager, and they do charge a little bit of fee for that. ETFs are exchange traded funds, so they're funds that trade like stocks, that you can get broad diversification in different sectors for that.
So ETFs and mutual funds are sort of packaged investments that offer a broader exposure as opposed to individual shares of a company. The risk you assume is individually defined. It's important to take into consideration your age, your knowledge of investing, and your disposable income. It's also important to avoid common pitfalls. Some of these pitfalls entail being too exposed to an individual sector or becoming overconfident and allocating a substantial portion of your investment portfolio to one specific company.
A good rule of thumb for deciding your risk tolerance or portfolio allocation is by using the rule of 100. So you take the number 100 and subtract your age, and that will be the amount in percentage that you should allocate towards growth stocks.
So the key component is having balance within your portfolio. You always want to make sure that you are carefully considering the long-term impact of your investment decisions and having that aligned with your specific goals. So having a dedicated portfolio of, say, 75% towards long-term safe value investing and 25% towards short-term growth stocks or opportunities that you are interested in pursuing.
So the key takeaways in this week's episode to define risk are which one works best for you, ETFs, mutual funds, or individual shares. We want to make sure that you all understand the risk associated with your investments. My risk tolerance is going to be different than yours. So depending on your investment style, you may want to choose ETFs, mutual funds, or individual stocks. It all depends on your personal choices. With all that being said, thank you for watching, and we will catch you next time on Inspired Investing.
Thanks for watching, guys.